Hey guys, what's up? This is Francisco with Valeriso Capital, and in today's video we're gonna go through the weekly watch list for the week of November 7. That starts tomorrow, Monday. We're gonna go through some of the names that are gonna be watching for this week, and just a heads up, I'm only watching for 3 names, and these are basically indexes. We're gonna go through the SPY, the IWM, the SMH, and we're gonna go through what is my analysis on those indexes and what is gonna be the vehicle that I'm gonna use to trade those names. I think that right now, given the market that we have and given the volatility that we have seen in the market, the only thing that seems to be following a pattern, in my opinion, is actually the indexes. We have seen some names like Apple. We can take a quick look at Apple. AAPL here, we can see that is basically trending lower. We can take a look at Amazon, also trending lower. We can take a look at Google, also trending lower. So I think that right now what makes sense is just to focus on the easy things. I try to keep my trading pretty simple. And right now the charts patterns that make sense in my opinion are the indexes right now, except for the QQQ. We're gonna take a look at the SPY, LWM, and the SMH, and we're also gonna go through the analysis and the tactics that I'm gonna use to trade them. So once again, welcome to the channel, guys. Remember to like and subscribe, that way more people can find this information valuable, and you can also support the channel that way so that we can add more people to the community. Also remember to follow me on my Twitter account at Valeriso Capital. I'm also gonna throw a link in the description so that you can find that pretty easy. And if you haven't yet, remember to watch my video for the weekend update of the market. You're gonna find a link right above in the video. That way you can also see that and understand why is that I'm focusing on the bullish side for this month of November. So first, let's start here with the SPY. Let me just grab my drawing tools pretty quickly here. That way we can start with the analysis that we're gonna see in these names right here. So right here I have the SPY. I'm looking for a trade here in the SPY that is gonna take us all the way to the declining 200 daily moving average. So that declining daily 200 moving average is gonna be somewhere around 410. And what is gonna be the trade? The trade is actually gonna be pretty simple. You can see right here. This, for anyone who's new to the channel, I have 3 main indicators on my screen. The one in the bottom is the TTM squeeze, which helps me to find moments of compression or moments of contraction before expansion in price. I have the trend oscillator, which helps me find the trend structure and momentum structure of the price patterns that we're seeing in the charts. And then I have right here the multi-J trend, which basically helps me find the structure in terms of moving averages, taking in account the 8 exponential, 21 exponential, and 13 exponential moving average of my charts. So back here in the SPY, we can see right here the pink EMA in my charts is the 200 hourly EMA. So I basically just plug in the hourly EMA into my daily chart, and you can do this pretty easily using TradingView. And why I have it here is because I have found a lot of success using that 200 hourly moving average in my charts. You can see that the last time that we had a move right into that decline in 200, we were instantly rejected, and then we had a pretty considerable move to the downside. You can see that 200 hourly acted as resistance at this level as well, and once we were able to cross above that moving average. Now you can see that the moving average is starting to trend flat, meaning that we are trying to change the trend here. You can also see some other examples here where the 200 hourly acted as resistance, then acted as support, and then we had a strong move to the upside. So that's the first observation for my thesis, that as long as we hold this 200 hourly here, I'm looking for more continuation to the upside in the SPY, taking us all the way to 410. If we take a look at my other indicators, you can see that I have a bullish structure in terms of my moving averages, meaning that the 8 exponential is above the 21 exponential. Well, the 8 exponential is above the 13 exponential, and that 13 exponential is above the 21 exponential. You can see that in terms of momentum, we broke above this base that we had in momentum, and now we are starting to retest that base as support, and I'm looking for a continuation to the upside in momentum. And you can see also that the squeeze is in positive territory, meaning that we are above 0. So that's kind of the thesis that I'm using for a bullish trade in the SPY. And of course, for this trade, you can use calls, you can buy the SPY, and the way that I'm going to trade it, the way I'm trading it right now, because I have a position in the SPY, I'm trading it via UPRO, which is the leverage ETF, is the 3x leverage ETF for the S&P 500. So 3x leverage ETF, meaning that this ETF moves in average three times what the SPY moves. So this ETF here moves in average 6.776%. So that gives us a really nice leverage in terms of the trade that we want to take using common stock. So you can also see right here that we have the same pattern. However, I use the SPY as the kind of as the map, kind of as the compass for my charting, and then I just execute in the UPRO, and then of course I look at some levels for our stops, but I'm gonna decide on those levels using the SPY. So let's take a look at the SPY once again. So what is gonna be the trade? The trade is gonna keep it pretty simple, keeping a stop right below this candle on Thursday, and then the target is going to be right here. That way we have a really nice risk reward in terms of our risk, and that way the trade makes sense right here. So that's going to be the trade that I have for the SPY. Now let's take a look at the other name, which is the IWM, and you can see that the pattern is pretty similar. And that's actually the beauty of trading, because once you understand a pattern, once you found a pattern that works, the only thing that you have to do is repeat it. You just have to look for the same pattern and then act on repetition, and that way your edge can start to act basically that way your edge can start to act in the future using a lot of these things. How do I say it? You're gonna need a lot of repetition, so that way the trade that you're taking, even though you have losses, if you have the adequate risk reward, then at the end of 100 trades, for example, your edge is gonna be profitable in the future. So that's something that we have to take into consideration when we are trading. And then as you can see right here, the IWM is basically the same analysis. You can see that the squeeze is positive. You can see that right here we are actually finding support right there into the midline in the trend oscillator. So that's actually pretty bullish. You can see that we broke above right here, above that midline. Now we're retesting that midline, and that midline in the trend oscillator is acting as support. You can see that we also have a positive stack moving averages, meaning that the trend in the moving averages is positive, and that means that there's a higher probability of continuation in the IWM. And you can see in terms of price, you can see that we're holding this important level of 177.29. You can see that we broke below this level on Thursday. However, we reclaimed that level on Friday. And if we see some continuation coming into this level, this candle right here is going to act as a bear trap, meaning that the participants who shorted this level, thinking that we were going to break significantly below the 177.29 level, are trapped, and they're most likely going to cover their shorts, and we're going to have more forced buy-in in the IWM. So what is the trade here? The trade in the IWM is actually pretty simple as well. We're going to use this low right here as our stop, and the target right here is going to be a close of this gap that we have right here all the way to 189.67. If we happen to get a little bit more, perhaps we can push it a little bit all the way to 200. But of course, taking some profits in this level of resistance just makes a lot of sense, and that way we can have a really nice risk reward in our trade. And then finally, the last name that I wanna talk about here is SMH. And SMH is a little bit more risky here, but what I really like about SMH is that we had this candle right here. So we had a really strong move to the upside, as you can see, right? Basically a short covering rally. and this one was coming right into that June low, into those June levels, low levels that we had, and that was a very important level of resistance. And you can see right here that of course it makes a lot of sense that a lot of participants try to short this level right here because it's a valuable setup. You can see that it started to work right here. However, on Friday we pop right above those levels. We actually close above the June lows at 191.40, and I think the pattern that I'm seeing here is that these participants right here that shorted on Thursday looking for some continuation to the downside are actually trapped, and therefore we can see a pretty strong short covering rally in SMH. So what is going to be the trade here? And of course, if we look at our indicators, we have the squeeze, we have the transition of the moving averages from this bearish structure all the way to this neutral structure. And of course you can see that the trend oscillator, it continues to be bearish because we're below that 52.71 level. However, we're starting to hold that EMA on the trend oscillator, and that's something that we haven't done then during this entire move to the downside. And another example is right here. For example, in this one we started to hold that level, and then of course we have a pretty strong move to the upside. And now we're starting to see that again in the trend oscillator, and that's the reason that I'm looking for some continuation. And of course, if you like moving averages, you can see right here that we are starting to hold that 21 exponential moving average. And if you have a question of what the 21 exponential moving average is, I also have a link right here in the video in which you can see a video in which I explain in depth what is the 21 exponential moving average and why do I always look at the 21 exponential moving average to find the short-term trend of a certain stock, ETF, etc. So that one is looking pretty nice. And the targets, the trade is gonna be here. What makes sense, if you want to give this one a lot of kind of a lot of space, I think that you can use this 185.45 as your stop. That way you can give the trade a little bit of space, because if we break below this level, the setup that I'm seeing is going to be invalidated. And then the first target, of course, is going to be this 200.56 level. And if we happen to see a really strong short covering rally, another target is going to be right here into 210. And that way you can see that we have a pretty strong target above, and then we have a pretty small stop below, and that way we can control our risk and look for more continuation to the upside. Of course, one of the ways that you can act on this is using the SOXL, and you can see right here that this one is looking, this is the short for the semis. And why, the reason that I'm showing you this, because you can actually short the inverse leverage ETF. You can actually do that, and the reason why is because you can see right here that the SOXL came into resistance right at the 66.52 level, and we got rejected. So I think that there's a strong possibility that we're gonna break this 55 level and look for some continuation to the upside. And of course, if you just want to buy the leverage long ETF, that's gonna be the SOXL, and you can see that the pattern is pretty similar to the one that we saw on the SMH. And I forgot to mention that for the IWM, remember that we look at this chart, the way that you can participate in this one is using the TNA, which is also the 3x leverage ETF, and the idea is going to be the same, using this level as your stop and looking for a short covering rally all the way to that 43.96 level, which is going to be that gap that we had right before that CPI announcement that happened on this day right here. And if you just want to take a look at the numbers, if you happen to buy somewhere around this level, your stop is going to be somewhere around 7%, and then your target is going to be somewhere around 25%. So that way you have a 3-to-1 risk reward trade, and that's a trade that makes sense as we talk in the long run. After you have a series of examples of 100 trades, if you continue to act on your edge, then you're going to have a positive outcome on your trading, and your trading business is going to be profitable in the long run, which is what matters the most. So once again, thank you so much guys for watching. I'm just trying to keep the weekly watch list pretty short because we have CPI coming on Wednesday, and I just want to keep my trading as simple as possible. And once we start to get a little bit more clarity, once we start seeing that SPY going above that 200 declining 200 daily moving average and actually holding that moving average, then we can start to look at different stock setups, because I think that as long as the SPY continues to be that declining 200 moving average, we continue to be in a bear market. But of course, some of the leaders are going to start to break up before the market does, and we also have to take that in consideration. But before the CPI that we have next week, I just want to keep this weekly watch list pretty simple. So thank you so much, guys, for watching again, and I will see you on future videos. Take care. Bye bye.